I'm Tony Drockton. I'm the founder, and they call me the chief cheerleader of Hammitt. We're a luxury handbag brand out of Hermosa Beach, California. I started that journey 13 years ago. Proud to say here we are 13 years later. We're the fastest growing luxury handbag brand in America. We're carried in over 850 retailing partners around the country, from small specialties to the Montage and Four Seasons, and the two only run family-run department stores, Von Maur and Dillard's. We also have two of our own retail stores here in Southern California, and a budding and growing online business, which is about half our revenue. We're in hyper growth, and that's why we've decided to go forward with the Reg A, which we just launched quietly last week. So I'm excited to be on this panel. So if you think about the retail purchaser in luxury 20 years ago, they had to look through a magazine or go to a gatekeeper in order to get that bag. It's just the way it goes. And also, it was very daunting to walk into one of those stores. You didn't feel welcome. Kind of feels a lot like the investment community maybe 10 years ago, right? It was a closed community. There was a lot of gatekeepers. You really weren't invited in. Let's take it up to today. With the expansion of crowdfunding, with the opaqueness becoming transparency, with the gates being closed to being wide open for access, and most importantly, the fact that private deals now have financial transparency that's been vetted, especially at the Reg A level. You can see deals, you have access to them, you're welcome in, and you can vet them pretty well. I think this is what's driving the retail investor community. And the last piece, of course, is they want in. They're seeing what's happening with the qualified investors over the last 20 years with private equity, with venture capital, and they're like, how come I can't get a piece of that? So kind of the same way luxury brands said, everybody can carry a luxury handbag if they'd like to now, as long as you know where to find us. When distilled DSTLD, that's when I discovered crowdfunding. I've been watching it for many years. Andrew and I spoke about it 3 years ago, and we did a real self-analysis, and we just weren't ready. So I saw it as something that we'd eventually do, but we set goals of where we needed to be for us to really have a successful crowdfunding. And that was when we started talking about it 3 years ago. And in between then, we did do a private equity round for a couple of $1 million. We were Portfolio Company of the Year for them the next year. It was at a valuation, which is, well, it's 1/10 of where we're coming out right now. So they've done quite well. And we went back to them and we talked to some investment bankers in between about a next round. And we learned a lot in that process. But in the end, I said, you know what? I'd love to really get the Reg A off the ground. So Andrew, let's focus on it. That was a year ago. And so we got the audits done and all that. And the reason we chose to go Reg A was that, as we talked about, empowering our fans was similar to me of when we opened our first retail store and people came in and they're like, I've been buying Hammitt at Dillard's and Von Maur, I love it, but oh my gosh, a Hammitt store. They're just so excited. They walked out with their bag, and if I was there, they got to meet me or they met my staff. And we noticed that it just exploded our business in Orange County where we opened the first store. We had the same thing happen with the Manhattan Beach store here. We see Reg A as the same way. It's like almost another storefront for us. It's ability for us to have a one-on-one connection with our investors, nobody in between. That private equity round was great, but those are not my investors. And they're very happy with that return, but I'm one of many. I don't have a direct relation with them. So we decided, let's go direct the same way we opened up our first store, the same way years ago we went to DotCom. But let's not forget that we'll probably be doing another private equity or venture capital round down the road. I think Reg A, it's not a finish line, and it's not the only way to go as you have a successful one. It's just another line on the cap table. If you do Reg A right and you have a long-term perspective, your realistic horizons, realistic valuations, realistic goals, you're going to have another round and maybe even another, and hopefully eventually a true IPO on a NASDAQ or a New York Stock Exchange. But you have to look at it over the real long haul. It's definitely not an exit, at least not for anyone here at Hammitt. It's really more of an entrance for us. I'm Tony Drockton, and I'm the founder. They call me the chief cheerleader of Hammitt. How did we get here? Well, Hammitt was started 13 years ago, right here in Hermosa Beach, California, with Stephanie Hammitt. And I jumped right in like a quick start entrepreneur in a partnership. Within a year, I was running it alone and had to figure this industry out. And it was a real blessing because I got to dive in and understand the nuances of fashion,
My background is as an entrepreneur was in everything but the luxury space. It was commoditized, finance, roofing, digital advertising. So I know you're asking yourself, why are you here today talking to the founder of a luxury handbag brand, and what am I going to bring you? I'm hoping I'm going to bring you some of that experience as a person from the outside, entering into an industry that I did not have direct experience or even indirect experience in. And how did we get to be where we are 13 years later? And where are we? Well, we're positioned as a luxury handbag brand, American. We're carried in over 850 specialty department store, resort doors, including the Montage, the Four Seasons, all the way to the only two family-owned and run department stores, Von Maur and Dillard's. And we grew 679% online in the last 3 years, 150% overall in the last 3 years. We've been added 200 specialty doors during the pandemic and another 100 this year. So that's today. But let's go backward to the beginning. But what I'd love to do is jump in and tell you my personal story, ending with, or even in the middle of what we're doing now, which we're doing what's called a Regulation A capital raise. We're actually selling stock, pre-IPO stock, online directly to our fans, and also creating new relationships with other retail investors at the same time. But that's the cliffhanger. I'm gonna go backwards. When you think about personal financing, when we started, I had my own savings, which you're gonna use to launch your business. But then also I had to borrow from friends and family. I used credit card debt. I also took out home equity, eventually had to sell my home, and I tapped my entire retirement savings. And that was just in the first couple of years in this industry. And the friends and family borrowing was a combination of high interest debt or convertible notes. Most recently, I was able to tap into the PPP and what's called the ERC, Employment Retention Credit. This third area that really helped us once we got going in year 2 or 3 is revenue-based financing. Again, I'll spend a little more time here. If you have revenue in your company, you can finance against that. So the early days, well before it was known, we could get credit card advances, cash basically against credit card charges from different lenders. It's become more mainstream, algorithmic, but back then it was really new and edgy. I can tell you the interest rates at the time were between 45% and 120% per year, but it was able to give me the cash to keep going. So the first loan was maybe 20 grand, and then we used it and we built up some revenue stream. The next one was 40 grand. I remember taking $120,000 loans for 6 months with a repayment of around 180 6 months later. But again, it was the cash we needed to keep going. Eventually, we were charging a lot of cards through PayPal, and we moved on to Shopify. And now both of them have their own lending. There's Shopify lending and there's PayPal lending. So if you're on that platform or you're using PayPal, or if you're using American Express, really any credit card, they will lend you money against an algorithmic analysis of how much you're charging every month. And that'll allow you, again, to survive. And the interest rates have come way down because of the competition. They're no longer 100% or 40%. If you've got an overall good cash flow and it's consistent, it's in the teens. So it's not a bad way to go and look. There's also a newer credit card type of business out there. The one that we found was Brex, B-R-E-X. This is a couple of years ago, but now they've become more mainstream. What Brex does is they tap into your tech stack. We have a pretty well-developed tech stack, all in the cloud. We launched on NetSuite 13 years ago. We added New Order in the middle, went to Shopify 2014. And because everything's in the cloud, Brex came along and said, if you give us access to your data, we can analyze your risk better, and we'll be able to give you a credit line much larger than anyone else. And a year before the pandemic, Brex came along and they really saved us. They gave us a $1 million credit line with no personal guarantee based on the cash flow of our business. And let me tell you, when the pandemic hit, it really saved us, because I thought, whoa, they're going to not do very well. People wouldn't be able to pay them back. We're going to struggle. I was worried the line would go away. They were the only ones not only hold my line, but to continue today and keep going versus some other asset-based lenders. Well, they're basically looking at your cash flow. And for us, that cash flow is multifaceted. We have our own retail stores. We are carried, and I mentioned the 800 plus wholesale accounts in the department stores. We also have a very strong online business on Hammitt.com. So they'll take a look at all of the cash flow coming from those businesses. They'll do a forward analysis of what's the probability of it continuing. Then they'll loan you money against that continuation of the flow, charge you an interest rate, but again, much more reasonable because they're able to see backwards into your exact systems, and it gives them a really tight algorithmic analysis of what's going to happen going forward. But I learned a lot from the meetings, and I said to myself, one day we're going to be able to get some traditional VC or private equity money. We hit the jackpot in 2018 with a small firm in Utah that lended money directly to small D2C brands. We were a little bit of a hybrid because we've always maintained, I think, very healthy relationships with our specialty stores and with our department stores. And later, if we have time, I'll talk about the business model that really allows that to happen. But because we had both strong wholesale cash flow and a rapidly growing D2C business, we were able to get a couple of $1 million of equity lending from a small firm in Utah at the end of 2018, call it private equity. We basically sold them stock and they gave us money. And that it's based on a valuation. So this is the first time somebody gave us a true, this is how much your company is worth. And then this is how much we'll be able to give you against that value. And we're going to own this much percentage of stock in perpetuity. That's a really big consideration for anybody on this Zoom. Don't go there early. If possible, avoid that until you have to, because when you think about it, when you give away a percentage of your company forever, that value hopefully will rise and rise. You never get that back. So you have to look at the increase in value as the cost of getting that cash, not just the percentage of equity you're giving up. So I've way too often seen too many people give up equity early on where they could have looked at some of these other areas, personal revenue-based loans. And I highly recommend them. Even though the interest rates could be higher in your mind, there is nothing higher than giving up equity, okay? There is no interest rate on it. You lose your percentage of your company forever. Is that a bad thing? No, it can be great. But you want to make sure, if possible, you do it when you can still be, number one, in control. And number two, when you can set terms that are very reasonable so that you can continue running the company the way that you want to. It's really important for you to understand control in fashion is everything if you're a visionary, if you're doing it differently, if you're trying to maintain brand integrity over anything. So when the pandemic hit, because I had voting control, I went to the private equity investor and I said, I don't want to lay anybody off. We're going to look for the opportunities, not the problems. We're going to double down on our ad spend. And we're going to really focus on where we can get revenue, not on the areas where we cannot. I was able to work with Dillard's and Bon Mar, and I said, listen, I need you to keep taking your orders and also confirm going forward. Otherwise, I can't make them. They did. So my biggest major supported me. The private equity firm did support me, and we were able to keep all our people. Took a pay cut of around 70% at the top and 40% for the top 8 middle, people. And 90 days later, we were able to restore that because we were already back on track and cash flow was positive. So all that story wraps into control. I was able to make fast decisions because I didn't need approval from anyone else on what we were going to do. I can tell you at Hammitt, we are continuing to do it differently. We are a non-promotional brand. We follow MAP pricing, minimum advertised pricing. We give up a lot of top line revenue at the discount channels because we don't sell to any, because we're really playing the long game, the 100-year plan of the luxury fashion houses of Europe. And because of that, that's why we're able to get those growth numbers in the past years. It's also how we're able to continue to raise capital because our margins are stellar. Well, we're going to go into crowdfunding, so everything is online about my company. And I can just tell you, our blended margins right now are above 65%. And that includes our wholesale sales, our direct consumer sales, and their own stores. And in the fashion industry, I think most people know, you can look at public companies like Coach and Michael Kors, and they're in the same range. So that's where you need to be for people to really invest into the long term. So I found this type of financing over 5 years ago, and I was so excited about it. And it's called crowdfunding. But back then, either we didn't have the time, the business wasn't in the right place, or it didn't fit for Hammitt. But last year we made the decision to go all in. So there's two types of crowdfunding laws that were passed. One is called Regulation CF, Regulation Crowdfunding, and then the other is Regulation A+. The delineation of the two is fairly simple. With Regulation Crowdfunding, you're able to raise up to $5 million direct from your fans and from people that don't even know you on the internet, on your phone. With Regulation A+, you can actually raise up to $75 million. Hammitt, we're in hyper growth. We're actually doing a Regulation A+. Reg A+, which is why we chose to do it, was important to me for a few reasons. We're a hyper growth brand. We're very established. Our network of wholesale partnerships, our 2 of our own stores with the 3rd one opening in the next quarter, our very strong presence online, our 200,000 existing customers that have bought from us, plus another 200+ thousand that have bought from our partners. We have almost 200,000 emails, 120,000 Instagram followers. You see where I'm going. We have this network that we can tap into. And then on top of all that, Karen asked me about a television series, which we're launching. It's called Going Public. And you can just look at goingpublic.com. We chose to be part of this first ever groundbreaking series because if you think about it, who here's watched Shark Tank? And when you see the idea, you're like, oh my gosh, either I thought of that, but I didn't get on Shark Tank, or I would invest in that. That's fantastic. Well, if you think about goingpublic.com, that's exactly what this is. It's basically Shark Tank, except the entire world will be watching this series. When it's about 3 hyper-growth brands, Hammitt, a company called Proven, which is an AI cosmetic brand, and a Spotify music competitor called Treble. And the 3 of us are telling our brand stories, our journey to raising capital. You get a lot of behind the scenes information from both the founders and their team. And as people are watching every week, they can literally just click to invest into those 3 companies. When we layered on top being part of this Going Public series, we raised our maximum investment to $25 million. That's how strong we feel about this series. So it airs on entrepreneur.com. So this is our story right here. 22 billion handbag market. Our growth rates, we've only raised $3.5 million in our lifetime. We'll do 30 million this year, 90 million lifetime revenue. For every dollar that we spend, we get $4 back. There's our margins we talked about. Here's the secrets of our margins, right? Multi-channel growth, efficient use of capital, non-promotional pricing, integrity on all fronts. And we mean that. If you're shipping wholesale product and you're expecting them to sell it at one price, and then you're on your website discounting it, I'm calling you out right now. You don't have integrity on all fronts. And if you think everybody's doing it, I can promise you that everybody's that are doing it, it's a race to the bottom. If you want to be in integrity, you got to give those partnerships a chance to sell it at the same price as you. And that's important to me. And that's why we have 800 partners. We are really a fashion and function brand. So you combine fashion and functionality, that's a Hammitt. We like to say we're the most functional luxury handbag out there, and we are. I mean, from external cell phone pockets to adjustable straps, to everything being in the right place, the softest, most luxurious leather. And then because of our lifetime guarantee, we call it the lifetime promise, even our hardware is jewelry grade. We will replace it or repair the hardware or the entire handbag if it prematurely wears and they're not happy with it. So that's intentional design. So, and then this goes on and on and on. I mean, there's plenty more pages here, but there's everything for someone to see. So they can really understand our brand. Now there's a button on there.
Sorry to put you on the spot there, but I had to show because it's, it's just super cool. I must wonder, with all the young men, investing in things like Robinhood and GameStop and, the AMCs, this is a fun way for women and, those who love fashion to support their favorite brands.
It's funny because of the, couple 100,000 we've gotten in already, from just people that have heard word of mouth, the majority have been women, Karen. So we have a product and a brand that women can sink their teeth into and get excited about. And I think that's why we're getting them from the investment community right now. But I think it's going to explode when we communicate with them directly. It's exciting.
I've learned over the 13 years to really listen, because the biggest ideas have always come from somebody that's passionate about their handbag or about the company. And we really listen to them. You guys should do this. You should come out with this. So I thought to myself, I started asking people a couple years ago, what about crowdfunding? Would you invest in Hammitt if we could? And people were like, yes, let me know. And I started just throwing it out once in a while. And I was like, you know what? Instead of going the traditional route of private equity, let's give this a shot. And I think the biggest fear, if anyone was not familiar with this, what Andrew said, you have to be completely transparent. So a 250-page offering circular, fully audited financial statements, everything, they can see everything under the hood. And what I realized is that's what we've been doing all the time anyways. We've really allowed people to understand our business model, what we do and what we don't do. And we've trusted them to decide to support us no matter what. And they're doing that by buying our product everywhere, not just directly from us. So offering shares to me was the next level. It was just connecting with our customers so that one day when people are walking down the street, instead of saying, what is that handbag? And know it's a Hammitt, they're going to say, what is that handbag? What's a Hammitt? And by the way, I'm one of the founding investors. I really love this brand. So I think it brings these customers to a whole nother level. And it really shows the team, our in-house team, of how much people support us. As a matter of fact, multiple employees at all levels have already invested, which is also a huge testament to the success. We've always walked the talk of price, brand, and product integrity. And we've always told our wholesale partners, we will be with you no matter what, as long as you support those three tenets. And when COVID happened, they saw we went into action. We really increased our ad spend so that when they opened back up, there was this built up demand for the product. So all boats rose together because we eliminated a person having to choose by channel and by price. We just wanted people to stay and fall in love with Hammitt. And that's why we're successful. So why invest in retail? Because we are the new retail. This is how all great brands will be building now. It's not separating here. This is my online, this is my specialty, this is my wholesale. This is who we are. And we invite people to discover us anywhere where we have a great partnership, and we fully support that. And that's what's happening. And I think that's what the consumer wants. They don't want channel conflict. I mean, really, channel conflict is really just price conflict. You know that. In the end, if you find it cheaper somewhere, we hope you do. Hammitt, we don't play that game. I think the future is very bright. In the luxury category, it's going to be about inclusivity, still about experiences once again. It's about an offering that's unique. And I'm not just talking about the product and the people representing it. And I think if you project 10 years forward, no one will be discussing different channels of how they sell their product. It's all melted together. And so if we look overseas for video sales, they're massive. I mean, people buy through watching video. It's nascent in America. So 10 years from now, people they'll either be on their phone talking to a person in the store, showing the product. With one click, it'll probably show up in 15 to 1 hour. And that'll be luxury. If they want to go to the store to get the full experience, these stores will be technologically savvy, but it should be still invisible. Because nobody wants to interface with technology in a retail store. They wanted to just make the experience that much smoother and better. The first 10 years, we were a wholesale driven brand, specialties, resorts, department stores. About 4 years ago, 3.5, we said, let's focus on direct to consumer. And so for a year, I had a person help me that was on the outside. And then about 3 years ago, we went deep, and that was after Andrew joined and Tracy. So we really started building out the digital advertising, and it started with bottom of funnel, the retargeting, all that, and then move it up to the middle, and then of course prospecting at the top. So now we're on OTT, which is national streaming ads across all of the Facebook properties, the Google's properties, but our email and our SMS list is by far our strongest for bringing people into the fold after they've discovered us. But I hear most, and this is for you, Meta, we saw you on Instagram. We saw you on Instagram. That's a really big one. And they say that when they come in the store, or they say that when they're talking to our concierge team. So there's a lot of strength right now, I think, prospecting with our influencers and with the social channels we've turned to focus on. And then the conversion happens with SMS and email the strongest. So, and I think a lot of it also is word of mouth. So in the last 4 years, we've brought on like Blessings in a Backpack. They just got honored at the ACE Awards. They were actually, we nominated them and they won an award and got a $25,000 check on top of what we had raised for them last year. And that's a charity that fed school children on the weekends that were already getting free lunches. It's a really great cause. So my feeling ideally is we keep giving more and more as we grow. So my largest checks have been 25 grand, but I'd love one day for it to be 100,000 and then like a Skechers, $1 million check. I just think it's part of the overall thing that you do when you're doing well.
And we're a luxury handbag brand right here in Hermosa Beach, California, born and bred. We founded 13 years ago. It seems like a long time, but really just got our wheels beneath us around 3.5 years ago, Andy. And that's when I brought on our current CEO, Andrew Forbes, and I'll talk more about that later. When you think about the luxury brands, most people just think of the great European brands, Louis Vuitton, Gucci, Prada. They don't really put the American brands in that category anymore. You know, the Coach, the Kate Spade, the Michael Kors. So when we launched, we decided we were going to fill the white space above the American brands, but below price point of the European brands. But we wanted to offer that same experience and absolutely the same high quality materials and workmanship with great European brands. And we pulled it off. That's why we're the fastest growing American handbag brand right now. When someone encounters our brand for the first time, I want them to have that aha moment. Like, how come I don't know this brand? That's the first step. Because what that means is we've done the work. And most of the time, people are going to encounter a brand for the first time right now on that mobile phone, on that little device that we all have in our hand. So we want to make sure that we're positioned properly. So when they encounter us, our ratings and reviews are in place, our imagery and our storytelling is already there. And hopefully we're already a referral anyways from somebody, maybe a friend, a work associated. So when they go into that phone to check us out, they have the aha moment. And then when they experience our brand for the first time, when they touch the leather, they feel it's the softest leather in the industry. When they put it to the test on functionality, they're going to find that it has zippers all in the right places. It's got exterior cell phone pockets. It's got adjustable straps. It's really, the zippers are so smooth you can open them with one hand. So it's going to pass the sniff test of what they want in a luxury handbag, but it's going to have the additional functionality that they're not getting in those brands. And then lastly, the experience with the brand, with the product, with the people that represent it. It has to be first class and it has to be memorable. And for that, we have a lot of fun. We have 2 of our own retail stores in California. A person walks in, it's old school. You get a glass of champagne. They offer a bottle of water. They're cold. We laugh. We have a good time. We might not even talk about the handbags for a few minutes. We get to know each other. And next thing you know, they fall in love with the associates, or if they're meeting me myself, then they fall in love with the product and then they take it home. Always just make it super soft, make it last multiple lifetimes so it can be passed down for generations. If you can do that, you're going to survive even the worst of times. Well, we started in summer of 2008, the Great Recession hit. So you can imagine we did survive the worst of times, and we grew every year because people that encounter our leather, it's what they say. It is the softest, it is the highest quality leather in the industry, especially when you look at, this is, $295, $325 bag. So we're not charging $2,000 for that quality. I was sitting around, I remember it was my first year, I'm not from this, I'm like, there's so much joy over just small groups getting together and doing something for good. And we would give 15 to 25% of the revenue to the charity of choice. Well, that has grown to supporting charities across the country. We specialize in women empowerment and education. Those are the two focuses, but we'll pretty much support any positive charity that asks nicely, as long as we have enough time, with the donation of a bag. We've done special collections for them. And it just really feels good. But my pivot was a couple of years ago. Someone's like, Tony, there's nothing on your website and you guys don't talk about this. Why is that? And I remember I was like, well, because Cleveland boy, you give to your church or you give to charity, that's just because it feels good. And they're like, Tony, if you could encourage other people to do this by talking about it more, then what you get is you get a double pop. You get the charitable giving that you already do, and you get to convert more people into being more charitable. And then when it comes to getting through tough times, I used to think you could shake a tree and the money would fall off it. I had some other entrepreneurial businesses. They all worked out great financially. Then when I got into this industry, I quickly found out with the Great Recession, the fact that I'd never done anything that wasn't a commodity. I've never sold luxury. I've never been in this industry. I was broke and I lost my house. I got divorced. My son had to move in with his mom for the first time, and I was couch surfing. And I got to tell you, getting through tough times is really simple. Don't quit. I got into it as an investment. Fell in love with Stephanie Hammitt, the founder and designer. I invested a little bit of money, thought I would be kind of a mentor, a helper for her to build the brand. And I really fell in love with fashion. I already loved architecture, art, design, but my past lives, my past entrepreneurial was really in commoditized businesses. So I wasn't sure if I could be successful here. And then she wanted to step away within the first year and said, take this thing over. And I did. And here we are 13 years later. And every year we've grown, and we're really on this mission to bring back luxury to the American handbag space. And what makes it exciting is there isn't luxury in the American handbag space. Chris, there just isn't. It's become a lowest common denominator business, especially in the Americas. And we've been overrun by the great European brands that everybody, if you love handbags or if you love a great backpack, you're probably carrying a Louis Vuitton, Gucci, a Prada, you're carrying a Chanel, you're carrying these brands that stand for something. And that's what Hammitt is. Hammitt stands for something. Our mission is to bring back a brand that an American can buy and wear and be proud of because it really stands for something. So we've already had a successful strategic investor, a private equity firm, gave us a couple of $1 million at the end of 2018. We executed so well. We were a portfolio company of the year of 2019. We won Accessories Council Design Awards in 19 and 20, and they're co-investing in this round.
Terrific.
Why are they getting into the Reg A on this round? Why did we do Reg A? Well, it's really simple. We're 13 years in the business, almost 800,000 units shipped to our customers since the beginning. We've stood behind the brand with a lifetime warranty. So we have this amazing customer base that loves us. And we want to activate that customer base. So going back to what you said about risk, we're not a startup. Yep. We're acting like a startup in the fact that we've grown from a little less or right around 10 million a couple of years ago to over 30 million this year. So you can really take almost those first 10 years and count them as practice. They say the hardest is the first million, and then the hardest is the next 9 to get to 10. And then you can explode to 50. That's where we're going. So if you look at us, we're more of a hyper growth brand right now. But the reason we chose to do a Reg A was to acknowledge the customers and the providers that really loved us in the beginning, give them a chance to get in on it. The story's been told before, the democratization, right? But most of the time it's being told about startups. It's a lot of risk. We've taken all that risk away because we're already profitable this year and we're already experiencing hyper growth. I mean, we're going to grow from 17.5 million in 2020, which was also a growth year during the pandemic, to over 30 million in 2021. And we're going to have net profitability and EBITDA profitability. With the 2 million we've raised and another 1.5 million, we're only 3.5 million of capital raised. And that's why I have super majority of the company. But
Wow.
with that little bit of capital, we've been able to get to 30 million plus in revenue. We have 2 physical retail Hammitt stores, and we have a lease for a third that will be opening first quarter of next year. And we're also carried in 800 retail partners around the country. And on top of that, Hammitt.com is more than half of our revenue. So what are we going to do with this additional capital? More of the same. There is no risk capital here. We have a fully built out tech stack. We have an amazing executive team. What we're going to be doing is we're going to be adding 7 more stores over the next 36 months. And why are we doing that? Because we found each store that we added, it gave us huge lift both online and at that store in revenue and in customer engagement. In addition to that, we're going to add a couple additional people at the top, a CFO, a chief revenue officer. And then the third, we're going to drive further growth with the capital, with a digital initiative and further expansion of some of the product line, deeper in backpacks, which are already winners, and deeper in our travel, which is doing very well right now. So the capital is really just to fuel the growth. We're throwing it right on the fire. We don't have any missing pieces right now that we need to fill in with that money, and we don't have a burn rate. So if you think about it, it's all going to go to become like that Louis Vuitton, the most profitable company in the world. Yeah. So, right here in the beach town, it started, our core customers are people, they want to carry a handbag brand or any brand that they can share with their family and friends. So I like to call it inclusive luxury. They want to be proud of it and they want to trust it. So I use a great analogy. Our customer, they love to be sitting on an airplane and talking to someone next to them and find out that they have the same experiences, they have something in common, and then they stay friends forever. That's the Hammitt fan. That's not defined by age. It's definitely not defined by where they live. It's a psyche. It's who they are. So for Reg A, I love the platforms, and sometimes I feel like, oh, maybe I should have went there because they have breadth and they have reach. But we made a choice to go the same direction: own the data, own the relationship. Then I figured out, though, we need more marketing. If we're going to try to get everybody to our website, how are we going to get them there? Well, that led me down the path to discover the Going Public series. And it just so happened the founders of the Going Public series overlap with the founders of Issuance in some way. There's a crossover between Aaron and Darren, and then there's some new guys, Todd. So I started researching it, and I reached out to Todd, and I talked to him, and I said, what is this show? In a nutshell, it's Shark Tank and The Profit. So it's a business web series that you can watch, except while you're watching it, you'll be able to invest in Hammitt in real time in less than a couple of minutes. That's cool. So we started shooting it late summer. There's 3 other brands on it, and we're all in hyper growth. And it's going to air, really could air as soon as next week. And then there's 10 episodes going into next year. Invest.hammitt, which is HAMMITT.com, is the investment site. And of course, you can go to goingpublic.com to learn more about the series. And of course, you can reach out to me, Tony, Tony, at HAMMITT.com anytime. I love to hear from investors.
So Hammitt's bringing luxury back to America. We're the next great American luxury handbag brand. And we're doing it with some really simple concepts. Absolutely unquestionable, highest quality product that functions every day. An experience with our team or with our retailing partners, 800 strong around the country, that is just, it's the best experience you'll ever have in purchasing a handbag. And then lastly, the after purchase. We make sure no matter what happens with our lifetime warranty, we call it the lifetime promise. Number one, we understand the difference between a relationship and a transaction, just like those brands you talked about. I mean, at Hammitt, we build relationships. We never have judged our success by top line revenue. We've always looked at bottom line, the number of new relationships we've created and how long those relationships have stuck with us. And number two, we've deeply focused on one specific category, not even all handbags, just high-end leather handbags, and not even all high-end leather, really mostly crossbody functional leather handbags. And we've gone so deep in that category that we've created a very strong brand. They don't want to know about your technology, so it should be, invisible to them. And lastly, I think having the attitude, that's the most important part in the company. we try to tell people your gut's very important at Hammitt, and we want you to keep knowing, leaning into that, but then verify it with past successes or failures so that we can go faster with it. Rock, paper, scissors should settle all disagreements. Let me explain that. It's really simple, man. When it's small decisions and you have to move fast and two people aren't aligned, rock, paper, scissors, make it go. Now, if it's a decision that's going to put you out of business, if it's a game changer, I would say to a new business owner, most people believe you have to be best at whatever you choose to do to be successful, right? I don't believe that. I actually believe you just have to be better than the current market leader. So whatever business you're in right now, take a look at that leader and figure out how you can incrementally improve on their offering, on their product, and you will be successful. And if you continue to incrementally improve it each week, each month, 13 years later, you're going to be like Hammitt. You're going to be the market leader in the category that we are in. We are the fastest growing handbag brand in America. We're almost doubling in revenue this year, and we more than doubled since COVID started. We're profitable, and everybody wants to carry one. Well, crowdfunding to me is just obvious when you're a brand that people love. And I believe inviting our customers to become stockholders, it's like inviting them to peek behind the curtain, right? And it allows them to share financially and most importantly, emotionally with our success. We're part of this first ever series. It's goingpublic.com is where you can look at it. This is a first of a kind series that takes content creation to the next level in crowdfunding. So Going Public, it's not a reality show. I call it edutainment. It's no different than The Profit or Shark Tank, except again, people can invest right alongside of the sharks. So if you think about long-term storytelling as a brand building exercise, there's nothing better than a 10-week series on us and 3 other hyper-growth brands where people can either fall in love or out of love with the company. And if they fall in love, they can own shares in it in real time. So there you go.
Growing up, my father owned a little grocery store in Cleveland, Ohio. And, I got to work there with him since I was 10. And he really taught me the value of, always putting customers first. A simple thing, had a little sheet of paper next to the register. You know what they asked for. If you heard it enough times, he'd get it in. You carry the groceries out to their car. You say hello when they walk in, goodbye. After a couple of successes out here then in home finance and the construction business, I decided I wanted to dive deeper into my passions. And, I was looking for an opportunity that would align with my love of culture and art and really love of people. And so then I took the reins of Hammitt 13 years ago. And I really, for the first time, felt like I'd embraced my passion for connecting with people like never before. In fashion, it definitely has its challenges, but, I believe with great people, you really can get through anything. And, from our team to our retailing partners to our fans, they're the cornerstone of all we do. And I think you asked what inspires me, and I'll tell you what inspires me every day is the people who always seem to find the silver lining in life, no matter what happens. I'm there who I aspire to be one day. Woo-hoo. That feels like 2 years has been like 100, by the way. It definitely wasn't easy, Brian. But we made a commitment early on in March of 2020 that we were going to keep our entire team all the way through the pandemic. For as long as we could anyways. And, everyone is really, they have a great team. I'm really proud of the teamwork it took for us not only to survive, but to thrive during the time. As a matter of fact, by midsummer of 2020, we were already cranking and we were hiring more people. Like many brands, we definitely dove deeper into the digital world. We added influencer partnerships. We started heavy digital ad spend, added streaming services, embraced some other softwares that could really help our digital relationships. But at the same time, we maintained our connection in the offline community. We have 800 retailing partners that carry us out there. And we made a commitment that we would make product for them as long as they would take it. And of course, we all know by the summer, the economy wasn't that bad and they needed our product. And so we were able to not only keep our original retail store that we owned in South Coast Plaza open, but we opened a second one during the pandemic, and we signed a lease on a third one in La Jolla, which will open up next year. So, I would say, oh, that's right. In November of 2021, we had our first big party We throw these raging events called the Retired Style event. Over 1,000 people get to come. That was the first time we were able to do that in over 2 years. And our fans got together and they celebrated. It was pretty magical to reconnect with everyone, and ultimately we believe in the future of luxury, and we know that it should be inclusive no matter how someone chooses to experience it, whether it's online, in our stores, or with our retailing partners. This is definitely in my element, Brian. I'm a secret tech geek nerd. I mean, we launched 13 years ago on NetSuite and Oracle. We've always been in the cloud, and our entire team's very inspired by tech, because it allows for a smooth, delightful customer experience. I like to say that your customer doesn't want to know about your technology. They just want a frictionless experience. So when the pandemic hit, we leaned even deeper into tech. For example, we brought on Domo, which is a business intelligence software, which allows us to leverage our successes quicker and avoid big losses. We also put a fintech product in place called Try Now. Try Now, think of it as that try-on room in the retail store. So customers can now get the product all the way into their home, decide which one they like, return the ones they don't, and then they get charged. We also embraced a product called Measured. When you're spending a lot of money on digital advertising, it's sort of like the 5 salesmen in the used car lot. When the customer comes back to buy, they all raise their hand. I talked to him once. I talked to him once. I talked to him once. Well, that's what happens with digital advertising. Everybody takes credit for the sale. What Measured does is they do an incremental approach to each dollar you spend and how it connects back to each dollar of revenue. So we're able to see how much YouTube versus Facebook versus Google versus our streaming ads affected that one customer for their purchase, and allows us to, again, lever up our spend or lever it down if it's not working. We also have direct communication to the floor of our factories through a software called WFX. We put that in place during the pandemic, called the PLM, which is a product lifecycle management software. And it gives us that real-time connection. Again, allows us to move way faster on sampling and sourcing and everything that we need. And I got more. We also added a company called TriPencil. This is an AI-driven video production software that I found during the pandemic. The founder used to work for Facebook for 8 years, and he has the back end of Facebook plugged into an algorithm. And he also has a software that then takes your creative, your calls to action, your bylines, spits them in, and then it comes out with new creative, new calls to actions, and videos that are said to perform best based on real-time algorithms and what's happening in Instagram and Facebook. And it's been a huge success for us. And then on top of that, we wanted our sales associates on the selling floor at our retail stores and also our concierge desk people to have a one-on-one communication tool for customers when they had questions beyond a chat. And we found a software called Hero, and it allows to have instant video or one-on-one chat with customers at their inflection point when they're ready to buy, or even when they have a question that needs to be answered to get them further down the funnel. And our team loves it. On top of that, we've had virtual styling sessions for a couple of years, even before the pandemic. We went deeper, and we've also gone much deeper into what's called live streaming, which is basically selling over a live stream. So there you go. I think number one, be sure to only surround yourself with great people and then listen to your customers. I mean, often it's one and the same. And I've always said you're truly the average of the 5 people that you're closest with. And I always suggest to keep trying to raise your average. So I believe your community wants you to succeed. So, don't see them as transactional. Make sure it's a true relationship and listen to their feedback, act on what fits, and they're going to continue to make you even more successful. And also on referrals, treat them with kindness, roll out the red carpet, and they'll spread the word for you. I mean, we got started in our little hometown here in Manhattan Beach by selling our handbags in people's homes at wine and cheese parties. And today, those same women that purchased during those early days are our biggest collectors. And they stand in the VIP line at these large ticketed events that I referred to earlier. And they take pride in knowing that they built Hammitt, one relationship at a time. So we work hard to live up to their hopes for our own future and for theirs. And in the same way that our customers are passionate, we ask our team members and our retailing partners to be just as passionate. Lastly, collaborate with talented people who have a volunteer mentality. What do I mean by that? means they don't show up just for the money or even for the prestige, but for the love of the project and the difference it makes for others, like a great partnership. I mean, it's really game changing.